Hi everyone, good evening. Welcome to yet another Spaces by LearnApp. Today are collaborating with a very special guest and a very special um, friend and a company investment. Uh, why don't you just introduce yourself and let's first get to know each other before we start the session.
Hey Arpana, thank you so much for inviting investment to your spaces. My name is Akash. I am one of the co-founders and CEO at Investment. Quick background about me: I am largely an engineer who also takes a lot of interest in stock markets. Would love to go deep into what we do. But yeah, I would happy to answer any questions, anything specifically that you would like to know.
Thank you so much, Akash. Firstly, thank you for being agreeing to do this with us today. And yeah, like the markets are going crazy right now, so would love you to shed some light into what's happening out there, and especially in today's session, it's going to be a very special one for traders, right? So I think it would be a great session. Um, just a quick update. I won't be hosting the session. The host is on his way. So I just wanted to get in here and get to know you and get to know all our audience and get any questions that they may have so that we can take in during this session as well.
Yes, absolutely, we can do that. So if you would like to invite any questions from meanwhile, we can do that.
Yeah, yeah. Anyone can request to be a speaker and I'll accept it.
Perfect.
Hi Akash, hi Arpana. Good evening. This is Quinton. I hope you can hear me.
Hi, yes, can hear you.
Awesome. Pleasure to have you, Akash, on this space. I am actually traveling. I'll reach home in 5 minutes. But let's start the session. I'm really excited to get this started. Should I throw you the first question, or should I wait?
We can get started. Either way works.
Awesome. So, my first question to you is, what is systematic trading?
Awesome, perfect. So let's cut the trading part of it for a minute and let us think about the word called systematic in itself, right? Now, by the definition book, it's an act of acting as per a fixed plan, right, or a system. It's something that is methodical in nature. Compare and contrast this with discretionary, right? It's not a mechanism where you quite literally are free to do whatever you want on your discretion or wish or will, but instead you are a slave to, let's just put it that way, a set of rules, the rules that you make for yourself or somebody else made for you, right? So now when you apply that process to trading or investing, that becomes systematic trading, right? Uh, Systematic trading in itself used to be very esoteric thought, maybe 4 to 5 years ago. Access to data, incredible amount of tooling has made it very easy now, especially let's say post COVID, it became super easy for anyone to come up with a set of rules, go pull up all the data, back test it, figure out whether it is something that is having a positive expectancy or not. Can you make money by following these set of rules or not? And that's what essentially systematic trading or investing is all about, right? Like, you could very well be an SIP investor who says that, you know what, as soon as I receive my salary on the last day of the month or the first day of the month, I'm just gonna, take out 20% of it, put it in a mutual fund. That's a rule. That's you being systematic about your investing. Or you could be somebody who says, you know what, I'm going to invest every day when market dips by 1%. Right now, it's not a time based investing or a time based trading, but it's a rule based, condition based, logic to saying that, you know what, every time this happens, I'm going to do this. And this goes deep, right? Now you can have um, option strategies built upon it. You could have cash segment, swing trading, intraday, currency, commodity, name it, right? Like, it's a school of thought wherein you can come up with rules or you can copy somebody else's rule. LearnApp being a great example out there. You guys are doing like an incredible job at educating people about let's say, how to build a momentum strategy or how to build a swing trading strategy, right? Now, how does somebody use that into actionable trading? Is where all the magic lies. So yeah, that's a quick intro to, in my opinion, what systematic investing and trading means, especially like for a retail investor.
Awesome, Akash. Explained very well. I'll quickly bring up the second question. You mentioned a discretion is there, right? Can you tell me what is the difference between discretionary and systematic trading?
Yeah, absolutely right. So I mean, a discretionary trading is you figuring out by yourself. Let's say random tips that are given to you by tipsters on Twitter or various Telegram groups that exist where you could just join. You could get to know, hey, you know what, this is something you could do, and you decide to do it. Right? You don't have any method behind that process. How much capital to invest? What amount of risk are you taking? Is largely, let's say, unclear to you at that point in time, because you aren't really following a method, a system that is dictating what should you be doing. Right now, not saying discretionary trading is bad. There are people, I know, incredible people who have a lot of things that are discretionary, but the rules of how much capital that I'll invest in every single trade, very well sorted in their head, right? So discretionary mixed with systematic is something which a lot of people do. Systematic entirely is, in itself, uh, a different ballgame altogether, where you are supposed to not let emotions come into play. You are supposed to be, very, very robotic in your behavior in a way, right? Like the profit and losses day to day should not really impact your psychology, because you know that the system you're trading in itself has an edge, is going to work over a longer period of time. It's just a matter of time, and you should be getting returns close to backtest or whatever it is that got convinced you to invest in this system in the first place, right? So that's a quick discretionary versus systematic.
You mentioned that you know a couple of people who are very good at discretionary. Would you suggest that people should start from discretionary trading or systematic trading?
To each its own. Extremely hard question to answer. Depends on each individual's risk appetite, your psychology, specifically speaking. Um, for you, it might, I mean, it could have been, let's say, a YouTube influencer or somebody really popular trader on Twitter who got you into the markets. Um, a lot of people start that way, right? A lot of people, um, the first trades that they place are from their bank RMs or, TV news anchors and newspaper recommendations telling you what to buy and sell. Um, and that's how you get started. And then very soon you realize that there has to be a better way of doing this. There can't be this madness can't continue, right? Like it's something you realize maybe a week or 10 days into the journey when you have lost enough capital, right? Because all you end up doing is probably buying higher, selling lower, and you're repeating that process over and over again until you start seeing like a good 10%, 20%, 30% capital loss happening before it starts becoming unmanageable and variable, right? And you start looking for better ways of uh, trading, doing things in a better way. And that's when you slowly graduate to being a systematic investor, right? Because the problem has to be clear in your head for systematic to be an answer, right? Systematic can't be an answer to somebody who hasn't seen the problem in the first place, right? So it's a very difficult, psychological battle to fight more than what is right or what should you start with, but rather, find your own technique, find your own sort of sweet spot where you feel, what, this is what works for me. And I have been on the both sides of the table as well, right? Like I started as a discretionary investor and trader, lost enough money, made enough money, and then realized, what, this takes a lot of emotional baggage to do this every day. Because, when you take a call and it goes wrong, you can't sleep peacefully, honestly, right? Like that night is terrible. And when you bring systematic investing into place, uh, when you make a lot of money, right, that day just is like, hey, you know what? It's enough cushion for the losses that will happen in the future. When you are making losses, you're like, you know what? In my back test, it clearly says that this strategy or this model can have probably 10 consecutive losses. So, you know what? I have a time machine. I like to call the backtest. I can go in the past and check what can possibly happen in the future while I'm trading this in live markets as well. And therefore, it doesn't really bother me as much, right? I can be pretty robotic, pretty stressless about my, everyday trading or swing trading, whatever I'm doing largely, right? Because it takes away that emotional baggage away from it, right? So I can be in the game for a much longer time because I know whatever I'm doing has a positive edge. The risk reward is in place. The expectancy is positive. I will end up making money. I just have to stick to the process, follow the process, and things will happen. So that's where I come from largely, right? And I hope that answers the question.
Understood pretty well, Akash. My next question to you is, what type of I'm so sorry. What are the different trading styles where one can trade systematically?
So depends again on the kind of investor you are, right? Like you could be a trader who wants to be invested daily in markets, right? So you could pick a strategy that works great on 1 minute, 5 minute, 15 minute time frames and say that I'm going to trade intraday, right? I'm going to trade intraday breakouts, mean reversions, whatever. Or you could be somebody who wants to take a more positional view on the markets and say, I only trade on, let's say, daily candles, hourly candles, which help me pick the trends for the next 1 week, 14 days, well defined by, let's say, targets and stop losses, so that you again know what risk reward you're getting into, right? So it could be, I mean, yeah, let's put it this way, right? It could be time frame based, where you could say, I trade intraday, I trade swing, I do monthly, quarterly stock buckets, baskets with rebalancing, whatever, right? Or it could be a trading technique in itself. It could be that, hey, you know what, I'm a momentum investor, I'm a momentum trader. It could be I try and follow index, I try and follow commodities, currencies, whatever it is that I study well, right? Or it could be that mean reversion as a underlying strategy. So it purely depends on the kind of investor you are. How much of a effort are you willing to put in learning about all of these aspects? Largely, it's not about the various kinds of trading strategies, but about picking one or picking a diversified, non-correlated set of strategies and sticking with them for a long enough time. That's what really matters, right? So you could very well pick, let's say, an intraday strategy, pick one swing trading, or you could, on the trading technique, right, pick up, let's say, a long-term investing married with active investing. Do let's say find the best stocks from sectors that are about to perform. Now, finding these and building a trading strategy is a different ballgame altogether. We can probably discuss that if we have enough time. But when it comes to the various kind of trading strategies and what you should do, it should be a healthy mix of things that are non-correlated, well diversified, so that equity markets come crashing, you are probably making money in currency. Um, and that doesn't really bother you, right? Like your probably portfolio is going down, but you're short on index, right? And the index hedge is helping you recover all your losses on the cash market, right? So largely, there has to be a way, there has to be a technique to playing in markets, and systematic is the way to go about it, right? Otherwise, too many emotions of fear and greed, difficult to keep up with, all the news, everything that's happening around the world, and assume that everything that you are doing will fall in place, right? Extremely hard battle to fight.
Awesome, awesome. Got the gist of it, man. Since we're talking about systematic trading, there have been a couple of events in the past 2 months which has bothered everyone. It can be a systematic trader or a discretionary trader. I'm talking about the events such as Adani fall, the SVB collapse, and today we are also seeing Credit Suisse collapsing. I think the stock has halted in trading by the exchange. How do you arrive, or how do you make sure when these things happen and you're trading systematically, you do not get into the fuss of it? Like, how does a systematic trader look at events such as these?
Very, very interesting question, and I don't honestly have a great answer to this. But what I do personally is that I at least define an upper limit to the exposure I'm going to take per stock or per strategy, and therefore my doesn't really matter what goes wrong with a specific single stock, but my net loss is always going to be capped, right? So that's one way of being systematic about how much exposure you are taking against, let's say, a single stock that can, probably ruin your entire portfolio. That being said, I don't think a trading strategy can be free of black swan events, right? These are events that nobody can predict. Bank runs don't happen every day, right? You don't find banks collapsing. It's not something that you can predict, and that's why it's a black swan, right? So very very hard, no matter what kind of an investor you are, which strategy you choose, that a stock like Adani won't have come up. Like I know so many um, momentum baskets that were full of Adani stocks, and you just hope for the lower circuit to open up and sell it back. So no great answer there, right? I think the answer lies in again risk management, asset allocation, ensuring that you are not over leveraging yourself, investing only what you can afford to lose in any given strategy out there.
I think that was a pretty good answer. When you have your losses capped, any event cannot breach that loss.
Yeah.
Thank you for the answer, Akash. I'll move on to the next question. How do we get started as a systematic trader?
That's a very 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 interesting question that I've spent a lot of time on. I built something called a Signal X before we were doing investment, and that was sort of a back testing engine, execution engine, and I've gone through the pain of being a systematic trader myself. Um it's extremely painful. Okay, like it's easy now where trading strategies are readily available. Backtesting software is readily available. You can now, if you have capital, you can get started with trading. To get started with systematic, ingredients are, you need to have a strategy. You need to have enough capital. You need to have a plan of action in place, right? How are you going to execute your system? Is it going to be manual? Is it going to be algo trading? If algo trading, who is developing that software for you? Do you trust that person? Are you trusting your, developer out there? You know that the rules are going to be absolutely right. The signals are going to come at the right time, whatnot. Or you could be, using a product like investment. Sorry for the plug there, but that's the idea we are, serving. How do you get started with being a systematic investor or a trader at the click of a button, right? Where most of these models, strategies, whatever you want to call them, are they go through rigorous amount of backtesting on tens of years of data. Only the best models, the best signals survive. Um, because the hardest part is not really coming up with a strategy, backtesting it, but it is following it, right? Like getting started as a systematic investor is really easy, by the way, right? It's the staying systematic part that is difficult, because how do you make sure that whatever that rule that you have discovered today, it is something that you're going to be able to follow week on week, month on month, year on year, without it getting to you, right? Without any constraints of technology and whatnot, right? And that's where you need to have, a certain process in place. That process can be powered by investment. It can be powered by your own systems. You could build it yourself, but essentially, you need to have capital. You need to have a strategy. You need to have a diversified set of strategies that are non-correlated in a way, right? So that's a very sweet, crisp way of getting started.
Understood. Nicely explained now. We'll move on to the next question. What are the new traders do when they start systematic trading? Like, what are the common mistakes that you've observed them do?
Um, very very interesting. So I think the biggest one is contra assumptions, right? Like you let your losses go deep because you believe that it's going to reverse. You book your profits early because you feel like, hey, you know what, I'm seeing it in green, let me book it quickly. I'm not sure how long it's going to continue its run, right? So contra assumptions is one that kind of is the biggest downer when it comes to systematic investing. um, People tend to over leverage often. That second one, right? Like you take that leverage that is offered to you by a broker, that 1% loss, you make it like into 5% loss or a 10% loss because you decided to play on leverage. um, Especially when people start playing with options, right? Like many a times what I've seen is people start buying options without educating themselves enough about options, and it's such a slippery slope to be on, right? Like you can lose so much money so quickly, without enough educating yourself about what you're getting into. And I think these are the core 3 pointers, right? Like contra assumptions, over leveraging, and not educating themselves enough about what they're doing, right? Like strategies might be dime a dozen, they might be readily available, but are you willing to take the profits and losses that will come with it every day? Forget about the profit side; those are the good days. But are you willing to take the losses that will come with it every day? And if the answer to that is no, then no trading strategy can really help, right? So I think the essence of it lies in, again, risk management, asset allocation. How much are you really willing to lose is what you should be getting started with.
Perfect, Akash. Moving on to the final set of questions now. What are the practices that every trader must follow? It can be daily or weekly, obviously, if they want to be a systematic trader.
I mean, the way I see it, systematic is more about gathering a lot of information. Like it's like a lot of preparation for ITJE, and then you are done with the exam. You get into the ITs, right? So I think the preparation part of it is the hardest, because coming up with a system that is profitable, that you can trade psychologically speaking for weeks, months, years, doesn't happen easily, right? So uh, the biggest effort has to be put in first of all developing that psychology, developing that system, making sure that you will be able to stick to it, and then it's just about practicing it every day, right? Not letting um, emotions sway you away largely, right? That's if anything, you should be practicing meditation than than investing time in markets, right? Because psychology is a downer, right? Emotions are a downer. That's something I think I've repeated maybe 100 times already in last half an hour, but that's the truth, right? Like it's extremely difficult to be a human being who does not face emotions in the face of big red numbers on your screen. And if you can uh, kind of detach yourself from the outcome and instead trust the process, because it was you who kind of opted into it in the first place. That's the state of nirvana, right? Like for a systematic trader. So I think practicing more about it has to be more around the lines of making sure you have enough systems again, making sure you can digest the amount of risk you are taking, and then just letting the systems do its magic, right? That's one advantage, in fact, you have over discretionary traders who have to like quite literally spend entire waking hours in front of systems, reading charts, taking trades on the fly, um, pacey heartbeat, whatnot, right? I've gone through all of that, and nothing relaxes me more now than signals coming on investment app, because I'm purely like trading on the investment app now. Signals coming, placing orders, and forgetting about it literally, right, until the exit signal comes. So uh, that amount of detachment is what you need to practice more than anything else for you to be at least successful at a level where you can say, you know what, I can be in markets for a long enough time. Um, I have been doing this for the last 5 years. Hey, you know what, I can keep doing it for the next five as well. I'm not going anywhere from the markets. And to have that confidence, you cannot be, changing systems every day. You cannot be, a madman just doing whatever in the markets, right? There has to be a method, a set process to the game.
I think one thing that you said is, you just stick to the system and you let system do its magic and do not interfere with it. And you can only have two ways, right? One, either your stop loss gets hit or your target gets
Absolutely.
hit. You have nothing to do.
Absolutely.
Entry is done, exits are in place, and that's what you have to do in systematic trading or investing. I think if I'm not wrong, someone, I think Warren Buffett or his friend, have quoted this like, money is not made while buying or selling, it's made while waiting. And it's similar to systematic trading as well, right? I'll come up with the final question, Akash. You've been a good answer, you've been giving good answers. That will be my final question today is, what will be the word of advice that you want to give to the new traders?
Start slow, right? Like the first thing would be start slow. Don't put in all your money into trading on day one. Find a system that you believe will work for you. paper trade for some time, maybe, right? Like let the signals come, um, see for yourself whether the amount of risk and reward it's presenting is, something you can digest. Um, it's akin to starting a business. End of the day, right? Trading is a business. There will be ups and downs, so be prepared for them. Essentially, that's the only thing you have to be ready in the world of trading. The final piece of advice would be that once you go deep into trading, right, it's a very lonely game. You end up just you and your laptop, you or your phone, all day, probably assessing the markets, whatnot. Try to get a peer group, right? Have a community that you're a part of. It gets easier, because if many of you, let's say, together have a win, celebrate together. Many of you have a loss together. You back each other up with that. Hey, you know what? No, we do this. We are not going to stop doing this. So just that three, right? Like kind of start slow. Don't put all your money in one go. Even at a system level, when you're starting with a singular strategy, start deploying small amount of money, 10,000 rupees, 20,000 rupees, whatever it is that you can afford to lose. You don't really mind losing. Once that 10,000 becomes maybe 12,000, 13,000, then put in another couple of two. Um, uh, Make it 20, whatever, right? Like take it slow, gradually bump up your capital. Um, that's the only way to survive in markets.
Perfect, Akash. The third point that you mentioned about community, we have a few listeners from our Learn App community as well who have just joined. Just want to give them a shout out. Supratim is here, Vishal Bhai is here, Sugandha ji was also here. I think Praveen is also here. These are active participants of our community. These are people who have graduated in our cohorts. They are super intelligent and are active on the community as well. Just wanted to give them a loud shout out for
Awesome.
attending this session. Perfect. Guys, if you have any questions, you have bottom right question tab. You can put in your questions and I'll ask Akash. I've received one question, Akash. I'll put in that. One Wolf is asking what should be the maximum loss per day in systematic trading. His loss per day is minus 2.5%. Drawdown is 3% and expectancy is 0.68.
Again, very, very subjective question. No right answer to this. Every strategy will be different. I try to make sure that I don't personally lose more than 1% of my capital in a day. And the system that I have together, they make sure that my equity curve is smooth enough, right? So that's what I look for, right? 2.5% loss of my capital in a day would be too much for me. But again, like I say, to each its own. In the world of trading specifically, you might be making 10% in a day as well. I try to make like half a percent a day. So that's the thing, right? Like it can't the drawdowns, the everyday loss can't be seen as an individual number. It has to be seen as a part of the system that you are trading, and that system should make sure that your daily drawdown, whatever it is, doesn't really bother you, right? Because your win days are way too higher in terms of returns. I hope that answers your question partially, if not completely.
Yeah, I hope One Wolf or Praveen would be happy to see that getting taken up today. Uh, I'm still waiting for a couple of questions if there are any, or we should end this. I'll wait for 2 more minutes. In the meantime, I just want to ask you how long have you been trading or investing
So
systematically?
yeah, I am a COVID investor. I started when I had a lot of time at hand. I went deep in options. Started trading manually first. Built an algo trading platform for myself. Which ended up being popular enough to be used by uh, triple digit people, and that's what got me really really invested and interested in this entire ecosystem of systematic trading and investing in the first place, right? So uh, options, futures. I tend to like follow trend on futures using something called as rider, Nifty Rider. We have something called on investment. Signal X helps me like trade those weekly straddles. I do expiry day trading. do swing trading using like weekly baskets we have at investment called high fives, trending tens. So yeah, I mean it's been a mixed bag. Follow like all sorts of markets to make sure that the the returns and the risks are fairly well smoothened out over time.
Awesome. That sounds like a very curvy journey. uh, Go ahead. Awesome. I have one question coming up from our community.
Yeah.
Praveen is asking, being a fresher, how much drawdown is advisable to take upfront? You need not mention the rupee term. You can mention the percentage as well.
Sorry, repeat that again. As a fresher,
As a fresher, as a
as a
beginner to
beginner to
trading,
trading. Got
how
it.
much drawdown is advisable to be taken as upfront? Like how much should be ready to face as a trader? Kitna drawdown aane wala hai?
I mean,
What
yeah,
should
yeah, yeah.
be
No, great. So I mean, even Nifty gives you like a 30% drawdown, right? Like there have been times in Nifty where had you bought at the peak, you would have gone 30% down. But again, you have to look at it from an equity curve perspective. Um, have there historically been instances where those drawdowns were recovered in times you are comfortable with, right? Was the drawdown recovery period 1 month, 6 months, 2 years? What does that number look like? And the longer that drawdown recovery period looks like, the the riskier strategy or model you are picking largely, right? So there is again no right answer to how much loss you should be willing to take. Um, if you're entering markets, be anytime at any time, be ready to lose like 15 to 20% of the capital, goes without saying. But for like more riskier strategies, 30% loss is like acceptable. Again, this is not a trading recommendation or advice, but this is fairly expected. If you want higher rewards, you will have to kind of take higher risks as well. So if you are looking to make that 25%, 20% CAGRs, beating index, generating alpha for yourself, that will have to come at a higher risk as well, right? So understanding your risk, knowing what you can lose, again, is paramount.
Perfect. Next question is from Ashwin Palo. Ashwin is asking, I'm new to investing. What are the good places to learn about trading? If you allow me, Akash, can I answer that?
Absolutely, please go for it.
Uh, I am, yeah. So it's Ashwin, right? Ashwin, we run a trading prime and investing prime on weekends. That is a learner product that is not mentioned on the platform till now. It's in beta mode. We do not accept all the entries that come up in that prime session, but since you are attending this, you can send us a DM. I'll provide you with a referral code and you can attend that session to learn how trading works. Next question I'll take up, Akash, is from Praj. Praj is asking, what performance metrics do you use for your strategies?
Sorry, I lost that. Can you repeat that again?
So Praj is asking, this question is from Praj.
Yeah.
Praj is asking, what performance metrics do you use for your strategies?
Got it. So, see, there are many ways of looking at a backtest report. A backtest report is composed of some, 20, 25 different parameters. People typically start looking with, the most obvious ones, which is like win rate. How frequently will this strategy work, right? Is it going to make me money every 7 times out of 10 that I traded, or is it only going to make me, win 3 out of 10 times? But that can't be the only deciding factor. Why? Because it's possible that when you lose very small. When you win, you win really big, right? So there are a lot of factors together um, kind of come up with a number called as expectancy ratio. Um, that's kind of a positive expectancy model is something that will make you money. Um, there are many other such factors. Feel free to kind of read up about it. But largely the core factors for me personally are a good mixture of win rate married with an expectancy ratio.
Perfect. Nicely answered, Akash. I loved doing this session. Thank you for taking out the time and doing this with us. Thank you, Arpana, for organizing this. Thank you, listeners, for joining this. I hope you enjoyed doing this, Akash. Maybe we can do this again.
Absolutely.
To all the users who have put in the queries below the tweet, I or Akash will take out the time and tweet and solve that. Thank you so much for attending. Arpana, over to you.
Yeah, thank you so much, Pulkit. Thank you so much, Akash. It was a great conversation. Really enjoyed listening to you. And I don't know, it's 30 minutes went by in a whiz. Thank you so much for being here.
Thank you, Arpana. Thank you, Pulkit.
Thank you, Akash. It was a pleasure doing it with
Pleasure,
you.
pleasure.
And thank you so much for doing this. Have a good evening, good night. Bye bye.
Thank you, guys. Bye bye.